Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the euro currency again. So today we will talk on the tactical steps that we have, because the fundamental view and long-term view we usually discuss in our weekly report. So recently we talked a lot about the further perspective, future perspective of the euro currency. It's really very tricky moment right now, and a lot of things depend on statistics that we will get, Fed statement and so on. But as you know, our opinion, as we expressed many times already, we think that United States economy stands near the overheat situation. And in the current circumstances, it could be the suicide to continue cut the rates. So, and even this rate cut stands a bit not quite rational, but we think that it's some kind of the compromise that Fed has decided to take, because the one single rate cut will not make a significant effect, but at the same time it could calm down market a bit and let Fed to get time to prepare market for the next decision. I would suggest the Fed probably already knows and at least it should know the numbers that we will get on the gross domestic product release, and somehow I suggest that the chances that we see not as dovish comments as market expects are significant. So we think that Fed should step out from the dovish policy, and it should take more balanced position. Maybe there will not be any speech on the rate hike, but at least it should be some neutral decision. Wait and see. So that should be enough to support the United States dollar currently. From the tactical point of view, actually everything goes as it should, because if you remember, the cornerstone of our short-term analysis is morning star pattern on the weekly chart. So here it's a kind of the engulfing pattern here, and it takes the shape of the head and shoulders on the daily chart. The same head and shoulders we have on the dollar index, also talked about it. So you can see this left shoulder, head, right shoulder, perfect ABCD pattern. Now market is coming back to the neckline. Following this pattern, we suggest that market could hit the OP target around 1060. So that will be the tactical target that at least is based on the pattern. So maybe market could proceed lower after that, fueled by Fed statement, gross domestic product release, European Central Bank statement on Thursday, or something else. But based on the pattern that we have, this is the target that is based on the pattern. And now market is coming lower. So our setup that we have described in the weekly report also works nice. So we also talked about the grabber here. So actually already has been completed, because market has dropped below these lows. But this action actually, guys, you can see, take the shape of the engulfing and suggest further downward action. Once market will drop below these lows, it will totally erase this ABCD pattern, and it will be decisive reversal downward swing. So that's important. Meantime, since the OP stands rather extended, we could take a look at some other patterns that targets that we have. So first of all, in the 4-hour time frame chart, we have the same ABCD pattern, but we also have the COP, and COP stands at 1150. Another pattern that we could get here is the butterfly. This butterfly, and you can see that 127 extension, 1618 enveloped the COP target. So as we have the downside tendency, I think that the COP is the first area that we should focus on. On the hourly chart, we have inner to butterfly ABC top pattern. So you can see it on the hourly chart, this one. OP already has been passed, and XOP, take a look, stands at the same point, 1150, 1145. It's very close to the COP on the daily chart. Another important moment that we have here is, take a look at this. Once market dropped below the B point, it stands there. without no attempt to return right back up. So it means that this is really some pressure, bearish pressure exists here, not in terms of the Jordan patching, but just by the price mechanics. So you can see market just taking some sell-off, passing for the lows, and with no attempt to return right back up, to show washing or something of that sort. Also, you could recognize here probably minor A, B, C tap, another A, B, C patching, but that is not the major extension here. So that being said, currently, as our trading plan works nice, based on the hand shoulders that we have on the dollar index, based on the Morningstar patching on the weekly chart of the euro, we keep watching for downward continuation. So retracement that we have discussed has been completed on Monday, so here some consolidation has been formed. As you can see, the market turns down. The nearest target that we will focus on stands here. It's around 1150 or maybe plus minus 13 pips, because here is 1167, 1135. So this area should be first destination point, and then we will see. This probably could be hit just right at the European Central Bank day, so on Thursday, and then next impulse will followed by the central bank decision, I suppose.